3 weeks ago, I noticed something in a data set that I almost scrolled past. One number in the Shanghai Futures Exchange Vault report had changed. Not by a little, by a lot. So I opened a spreadsheet and started tracking it, day by day, then week by week. What I found pulled me into a rabbit hole I haven't been able to climb out of since. If you own physical silver, if you hold silver mining stocks, or if you've been watching prices fall and wondering whether you made a terrible mistake, or whether something else is really happening, this video will answer that question. I'm going to walk you through exactly what I found in the same order I found it, so you can see what I saw. And somewhere around the middle of this video, you're going to hit a piece of information that will make you pause and rewind. I know, because that's exactly what happened to me. It all started with one chart. Welcome to Boring Currency Live, where we track what the mainstream ignores. If this analysis opens your eyes to something you haven't seen elsewhere, hit like and subscribe. It helps the algorithm put this in front of people who need to see it. So let's get into it. The Shanghai Futures Exchange, or the SHFE, is one of the biggest and most important commodity exchanges in the world. They publish daily reports on the inventory levels of various metals held in their approved vaults. Think of these vaults as the exchange's physical stockpile. These numbers are crucial because they tell us how much real physical metal is available to back up the paper contracts being traded. Normally, the silver inventory at the SHFE is pretty stable. It might go up a bit, it might go down a bit, but massive swings are rare. That's why, when I saw the number for silver, I did a double take. Over a single week, the amount of registered silver in their vaults had dropped dramatically. And it wasn't a one-off event. The next week, it dropped again. And again. I started plotting this on a chart, comparing it to historical data. For years, the inventory had hovered in a relatively predictable range. But what we're seeing now is a consistent rapid drain of physical silver from the largest exchange and the world's largest consumer of silver. China, this isn't just a minor fluctuation. It's a waterfall decline. Week after week, hundreds of tons of silver are just vanishing from the official record. So where is all this silver going? That's the billion-dollar question. Is it being consumed by industrial demand that's far higher than official reports suggest? Is it being bought up by large private entities who want physical metal, not paper contracts? The exchange itself doesn't tell us who is taking delivery, only that the metal is leaving the vault. This is where things get really interesting. I decided to cross-reference this data with other sources. I looked at import and export numbers, manufacturing data, and even chatter on Chinese social media platforms popular with investors. What I found was a pattern of disconnects. The official narrative says one thing, but the movement of physical metal tells a completely different story. And here's the part that made me rewind the tape. While the silver inventory in Shanghai was plummeting, I looked at the inventory levels at the COMEX, the main futures exchange in the West. And what did I see? A similar trend, though maybe not as steep, was also happening there. The registered category, which is the silver available for immediate delivery against a futures contract, has been on a steady decline for months. So you have the two largest and most influential precious metals exchanges in the world, one in the East and one in the West, both showing a significant and sustained drain of physical silver from their vaults. This is happening at the same time that the paper price of silver has been weak or trending down. This is a massive divergence. The paper market is telling you silver is plentiful and not in high demand, but the physical market is screaming the exact opposite. This isn't just a number on a spreadsheet, it's a signal. A signal that the demand for real, tangible silver is vastly outpacing the available supply at current prices. When physical supply gets this tight, something has to give. Historically, when these kinds of physical shortages become acute, it can lead to a dramatic repricing event. It's a classic supply squeeze scenario. Think about it. The entire paper market for silver is built on the assumption that if you want to take delivery of the physical metal, you can. But what happens when everyone tries to do that at once and the vaults are nearly empty? The price of the paper contract becomes relevant. The only thing that matters is the price someone is willing to pay for the last available ounce of real metal. What we're seeing in Shanghai isn't an isolated event. It's the leading edge of a global trend. The industrial demand for silver, especially in solar panels and electronics, is exploding. At the same time, investors are waking up to the fact that physical metal is the ultimate form of money in a world of endless currency printing. So, if you've been holding on, feeling frustrated by the price action, this data should give you a different perspective. You might not have been wrong, you might have just been early. The disconnect between the paper price and the physical reality cannot last forever. The drain from the vaults in Shanghai and New York is a countdown clock. What does this mean for you? It means paying very close attention to the physical market, not just the paper price you see on TV. It means understanding that the current price might be an artificial construct that is rapidly losing its connection to reality. The market is showing signs of extreme stress beneath the surface. This is the kind of setup that precedes major market moves. I'll continue to track these numbers daily, and I'll keep you updated on what I find. This story is far from over. In fact, it feels like it's just getting started. If you found this analysis helpful and want to stay ahead of the curve, make sure you're subscribed with notifications on. You know, in the world of finance, there's a lot of noise. You hear opinions, you hear speculation, and a lot of the time it's just some guy on the internet guessing what's going to happen next. But today, I want to talk about something different. This isn't an opinion. This isn't a theory. This is hard, cold data coming directly from the source. I'm talking about the Shanghai Futures Exchange, or the SHFE. They publish their vault inventory data every single day. This is the official count of how much actual physical silver is sitting inside their warehouses. We're talking about real bars in real vaults with audited numbers. This is as close to ground truth as you can possibly get. So I went to CEIC, which is one of the most respected economic data platforms in the world, and I pulled the complete historical data for SHFE silver inventories. I wanted to see the trend for myself, without any filters or commentary. And what I found was honestly staggering. Let's rewind to mid-December of 2025. Back then, the SHFE reported having roughly 900 tons of physical silver in its vaults. That's a substantial amount. Now, fast forward to February 4th, I pulled up the latest number and it was 423 tons. I literally stared at the screen for a moment. I thought, is that a typo? Did the data load correctly? So I refreshed the page. Same number, 423 tons. My curiosity was piqued. I decided to dig deeper. I checked the number for the previous day, February 3rd. It was 449 tons. Okay, so it dropped overnight. What about the day before that? 462 tons. And the day before that, even higher. I started going back day by day, entry by entry, through the official records. Here's the most shocking part. Every single entry was smaller than the one before it. Let me repeat that. It wasn't that most days the inventory went down or that it was trending down on average. For a solid 6-week period that I analyzed, I could not find a single day where the silver inventory in the Shanghai vaults increased. Not one. Think about what that means. This isn't a normal fluctuation. This isn't just typical seasonal behavior where inventory ebbs and flows. What this looks like is a one-way door. Silver is being physically removed from these vaults, day after day after day, and it's not coming back. We're witnessing a relentless, uninterrupted drain of physical metal from one of the world's most important exchanges. When you see a trend this consistent, this unidirectional, it forces you to ask some serious questions. Why is this happening? Where's all this silver going? And more importantly, what happens when the number gets closer and closer to zero? The data from the SHFE isn't a prediction. It's a real-time account of something significant unfolding right before our eyes. The numbers themselves are telling a story, and it's a story about a finite resource rapidly disappearing from a major global hub. This is something every investor, regardless of what you trade, needs to be aware of. Let me put this into perspective for you, because numbers without any context are just noise. 900 tons down to 423 tons in just 7 weeks. That's a staggering 54% drawdown. More than half of all the silver in China's main exchange simply vanished in less than 2 months. If we break that down, the weekly drain rate works out to roughly 42 tons per week. The daily drain is about 10.7 tons every single day. And when you look at the chart, the scary part is that the angle of decline is getting steeper, not flatter. This means the drain is actually accelerating. Now, let's zoom out and put this into a global context. If you combine the silver in the Shanghai Futures Exchange vaults with the Shanghai Gold Exchange vaults, you get a total of roughly 900 tons of exchange-accessible silver across all of China. Now, that might sound like a lot, but wait until you realize that the world consumes over 1.2 billion ounces of silver every single year. So all of China's exchange silver, that entire stockpile, only covers about 2.4% of just 1 year of global demand. That's not a buffer. That's not a safety net. That's fumes. It's the equivalent of running your car on an almost empty tank, hoping you make it to the next gas station. But here's where it gets really interesting, and this is something you won't hear in any mainstream financial article. I actually ran the math forward. If this drain rate holds at roughly 42 tons per week, and the current inventory is around 412 tons, what happens next? Well, you get about 10 weeks. 10 weeks. Let that sink in. At the current rate, the SHFE silver vaults don't just get low. They don't become a cause for concern. They hit zero. We're talking empty shelves. Nothing left to deliver against futures contracts. Imagine going to the grocery store for milk. The entire dairy section is just gone. If you're someone who holds physical silver, or maybe you're invested in silver mining stocks and you've just watched prices get hammered, this is what that number really means for you. The exchange that underpins a massive portion of silver price discovery for all of Asia is on a trajectory to run out of metal. Now, am I predicting this will definitely happen? No. Drain rates can change, metal can flow back into the vaults. But here's the key point. The one thing you should really take away from this: no one in the mainstream financial press is even running this simple calculation. No one is talking about this. And that fact alone should tell you something very, very important. The silence is deafening. That's when my research took its first unexpected turn. I wanted to know if this was just a China story. Maybe Chinese industry is pulling silver for solar panels and electronics. That would make sense. So I checked COMEX, and my stomach dropped. COMEX, the main U.S. silver futures exchange, reported its total silver inventory falling to roughly 415 million ounces, the lowest level since early 2025. But what really caught my attention was the registered silver, the metal actually available for delivery. Registered inventories have been bleeding out since late 2025. Eligible metal is being reclassified just to meet delivery demand. No new metal is coming in. They're just renaming what they already have. It's like a restaurant running out of food and relabeling appetizers as entrees. The menu looks full, but the kitchen is empty. So now it wasn't just China. Shanghai was draining. COMEX was draining. So I checked the third vault, London. According to multiple independent analyses, the LBMA S free float, the silver actually available to settle London's massive unallocated market, has collapsed to levels described as the lowest in modern history. For the first time ever, all three major transparent silver inventories, Shanghai, COMEX, and London, are draining at the same time. Nearly 1 billion ounces of visible silver have disappeared since 2021. Just stop and think about that for a second. If this were oil, it would dominate the headlines. If this were copper, governments would be holding emergency meetings. But it's silver, so you're hearing about it here instead. Silver doesn't just vanish. When it leaves a vault, someone signs paperwork, someone arranges transport, someone takes possession. And whoever is doing it is doing so across 3 continents at once. That's not a coincidence. That's coordination. Then I noticed something else. On January 1st, 2026, China implemented new silver export controls. Silver was officially elevated from a normal commodity to a strategic material, the same category as rare earths. Only 44 state-approved companies can now export. Most of the world's refined silver supply is now effectively locked inside China. Within days, buyers were offering huge premiums just to secure physical metal. That's how you know a restriction is real. When I mapped the vault drains against these policy dates, the pattern snapped into focus. China briefly restocked its exchange vaults, then slammed the export door shut. Now silver is flowing out of the vaults again, but it cannot leave the country. It's moving from public vaults into private hands, from visible inventory to invisible reserves. And here's the number that made me stop typing and just stare at the screen. At the current drain rate, the Shanghai Futures Exchange vaults approach zero around mid-April 2026. Then I checked something else. India's Reserve Bank is allowing silver to be used as formal bank collateral, starting April 1st, 2026. The first remonetization of silver by a major economy in over a century. Think about that timing. The same week, Chinese vaults are approaching empty and Indian monetization is going live. I didn't create that convergence. The math did. This isn't just an inventory story anymore. It's a complete restructuring of who holds silver, where it sits, and under whose rules. The paper price you see on your screen is set by exchanges that are running out of physical metal. When the physical runs out, paper pricing stops being reality, and reality always wins. Silver isn't crashing because nobody wants it. Silver is crashing because someone wants all of it, and they need the price low enough to take it before the rules change. If you've held through this crash, you're not wrong. You're just early. The data is on your side. The vaults prove it. And right here, I'll keep tracking every report, every vault update, and every delivery notice. Because when those vaults approach zero, everything changes. This is not financial advice. This is what the data shows. What you do with it is your decision. Thanks for watching, and be sure to follow for more updates.